those first, call it 25 years, traveling 40 to 50 trips a year, working very long hours, weekends, also trying to raise three children. It was very challenging.
Welcome to Price Discovery, Money and Mindset. Go under the hood with Jordan Rodriguez, a certified financial planning professional and certified exit planning advisor, as he explores the art of balancing wealth with personal fulfillment. We'll hear strategies and stories from industry experts, business owners, and thought leaders about navigating the complexities of high net worth families and businesses. Without further ado, here's Jordan Rodriguez.
Hello, friends, and welcome back to another episode of Price Discovery, Money and Mindset. I'm thrilled to be joined by Ivy Zelman this week, the co-founder of Zelman, a research firm which provided analysis across all aspects of the housing spectrum. Ivy's been widely known and respected for her bold thinking and accurate assessments where others failed, helping industry players avoid costly mistakes and capture game-changing opportunities. She's perhaps best known for her call of the top of the housing market as well as the bottom. Today, however, Ivy joins us to discuss her founding of Zelman after leaving a lucrative career on Wall Street, scaling the firm up and eventually selling it to Walker Dunlop, a publicly traded company. A lot of the inspiration behind the questions that I was able to ask Ivy were from her memoir, released in 2021, called Gimme Shelter, Hard Calls and Soft Skills from a Wall Street Trailblazer. I recommend everybody go out and read the book. I will link it in the show notes, but until then, enjoy. Ivy Zelman, I really appreciate you taking the time today. This is going to be a fun conversation. A lot of this was made easy because you wrote such a fantastic book. I've had guests on in the past where I have to do a lot of digging and finding really good questions to ask, but you teed it up for me. So I appreciate you making my job really easy. We're going to talk about a number of different things, but I think first and foremost, the best place to start is just, where do you spend a lot of your time now? Are you here in Cleveland full time?
Yes, and thank you, Jordan, for having me on. It's great to do this with you. I am in Cleveland full time. I do travel still for work, but I am here and a little bit in New York, and sometimes in the winter, Naples, a little bit.
There are worse places to be in the winter. That
Yes.
is for sure. Talking about building a really successful business, it's not something that happens overnight. It's been a lifelong process for you. Before we dive into some of the logistics, I always like to level set with the audience. Can you give us a sense of the size and scope of Zelman? I don't know if you're able to give us those metrics as it stands right now, or maybe go pre-partnership with Walker and Dunlop. Spoiler alert to the end of the story, but can you give us a sense there?
Yeah, for our department, we're about 25, 30 million.
Very nice. When you started out on Wall Street with Salomon Brothers and Credit Suisse, you do a really interesting job in your book of talking about some of the skills that you honed. You learn lessons by some people who did things the right way, some people who did things maybe a way that you would do differently. Can you talk about some of the skills that you attained early on in your career that have fostered some of the success that you've had to this point?
Early on, when I was looking for a job, or even still in school, I was actually working full time and going to night school. I realized the challenges of penetrating any significant employer. A lot of it is who you know. So networking became essential, and it was asking for help and people that you knew in the business, and who do you know, and that was something that I really honed in on, the networking aspect of how to get a job. And then that networking skill continued throughout my career as a housing research analyst, to develop relationships with people to help better understand the markets. So networking really throughout pre-Solomon, and then continued through my career today. So networking was critical. Solomon was a pretty brutal training ground. I went from working what used to be Arthur Young, now is Ernst & Young, at an accounting firm where people worked hard, but they didn't really work at night or weekends, to a place where people worked 7 days a week, worked 80 to 100 hours a week. So it was really my work ethic. It was significantly boosted by being in an investment bank, both at Solomon and Credit Suisse. And I think it was a great foundation of really appreciating, hard work and the benefits of the payback of that hard work. I think having the ability to collaborate with people within your team and within my department in corporate finance, I was forced to interact with other departments within investment banking, with others in equity research, sales and trading. So learning how to interact with other departments and successfully getting people to help me or work with me. I think the people skill aspect was a big part of my success, and being willing to admit when you're wrong and ask for help when you need it.
Do you think that has changed? I mean, you've dealt with a lot of, hiring new employees, but just you're out in the world all the time and you see the crop of young talent. Do you see that level of work ethic, networking? Everybody wants to talk about how this new generation is different from previous generations. They don't work as hard, blah, blah, blah. Is that your experience anecdotally?
If I had to push one way, I'd probably say yes. With that, I do see exceptions. I've been teaching a one credit class at Case Western. Right now, I'm in the middle of the fall semester and I have about 20 kids. And I think a lot of them are really ambitious and have had really significant jobs during their summer internships. So I've been impressed with this group, but I do see that a sea change in how people view their balancing with work and their home life. And a lot of my employees today, when I was working 80, 100 hours a week, I don't ask them to do that. I think
Hmm.
there's a level of commitment I expect. Responsiveness is one of my major tenets. People have to respond to me. In fact, when I was starting out at Solomon, there's a company called Institutional Investor. They actually publish a magazine, and that, for whatever reason, became the hallmark of our industry. And they put out an annual ranking for every silo within the ecosystem of the S&P. So whether you're in autos or housing or tech or healthcare, you had those analysts in those respective areas were ranked. So you had your number one best analyst, number two, number three, then a runner up. And one of the things that happened for me that was really positive feedback that I jumped on and continued was how responsive I was to clients. And so I really expect responsiveness to me when my employees are working for me. And therefore, that's one of the tenets I look for. Humility. I think there is a lot of arrogance on Wall Street. So I really find myself gravitating to young people that have grit and are yet humble. And I don't like arrogance. So I look at humility. I look at responsiveness. I look at their ability to really articulate whatever their desires are and be very well spoken. That's an important aspect of what we do. We have to interact with clients on a daily basis, with industry executives. I'm sure there's a lot of other things, Jordan, that I look for, but for me, responsiveness and humility are big ones, and definitely separate candidates when we're interviewing.
You've embodied all of those traits, and that's part of, well, a huge reason why you were able to build such a successful firm. But before you built that successful firm, you had another really successful career on Wall Street with a couple of different big banks. I'd love to hear what the internal and external motivators were for you to go out and hang your shingle. I mean, that was a big risk that you took. You had to have some really good reasons to do so.
Thank you for saying that. I did, but I'd say first and foremost, I'm extremely competitive, less than I was back then, but I was also motivated by fear. I wanted to be successful. I wanted to be financially secure. And I think that once they gave me like what the goal was, which is to be number one ranked housing analyst, I would ask salespeople, I'd ask industry executives, I'd ask our institutional clients, what's it take to be number one? And really having that feedback and then running with it and doing everything that they guided me towards, I think really enabled my success. It was me constantly seeking information about how to do a better job. What's not being written about? I'd ask the management teams, what do you think the analysts are missing? I'd ask the salespeople, what makes a great analyst? Bold calls, but doing the work, finding a salesperson who said to me, go do proprietary work. Don't rely on the public companies to tell you what they're seeing or how they're performing. Go and find private channel checks. A lot of the advice I was given, and that's one thing, I'm extremely open to input and collaborative contribution. So I think that was what I found myself most importantly doing, is listening and learning from others. I think that set the stage for what was a successful career. And when I look back on my calls that I made on my housing stocks, I was able to make a big call on asbestos early on in my career that really gave me some credit with the institutional investors and respect. And then when, other calls I made, but the big call I made was the top of the market call for housing is likely to crash. And then making a call that housing was bottoming and housing was improving. But when I made the big call that housing was a bubble and we are going to have it not end well, I think I started realizing that Credit Suisse was utilizing my research firm wide. And yet I was only being remunerated for trading home building equities. In addition to that, I really felt that I should do more than just home builders and building product stocks, that I had an opportunity to broaden out the coverage into areas that were adjacent, like multifamily or the mortgage market or real estate services, and other analysts at Credit Suisse were already doing those. And combining that, I wanted to grow and expand my coverage with the idea that maybe I could make more money in hanging my own shingle. And it was really a former colleague that started his own firm, Michael Goldstein, who is successfully, was one of the pioneers in starting an institutional sell-side firm, standalone, that encouraged me to do the same thing. And a few people that were friends with him, one of which was a salesperson, Larry Sibley at Credit Suisse, is like, you should do this. And initially, when I thought about it, the safety of having a job and making good money and having notoriety and, everyone likes me and I'm well regarded in and outside the firm, could I really do this on my own? And as I started to chat with managements and clients confidentially, they're like, yeah, we'd go with you wherever you go. So it kind of built momentum. And my associate that worked with me, Dennis McGill at Credit Suisse, he was like, we should do this. We should do it. So it really wasn't just my decision. I felt like having sort of groupthink, and my ex-husband was like initially not really excited about it. But once he realized I was pretty determined, he also helped by saying he would do the back office stuff. So I could just focus on doing what I do every day and it wouldn't be any different, which wasn't true. But I felt confident that, well, it's just a new name on the door and I could just keep doing exactly what I'm doing. And that really was, I think, what I needed to have the conviction to move forward to start my own firm.
Sure. How would you describe the logistical process? I know you mentioned that David was handling some of the back office type work, but what did the professional team look like during that transition? You had to do legal, HR, all these things that are required for building a business that wasn't part of the day-to-day before.
Jordan, it was really a work in progress. I can tell you that we didn't think through everything. So it was Dennis McGill, my co-founder, and we brought over our associate, Alan Ratner, who was working for us at Credit Suisse. And we had really David as what was back office and also sales. So we started interviewing, trying to hire salespeople, wanting to hire more analysts. We worked in a similar to shared office service where you go in, it was Regis, and we rented, a very small office with three of us kind of cramped in. Kim Gray was our admin. And I remember at one point we weren't paying bills like our rent and our lights and our electricity, whatever. And, David, we need someone who's an accountant that can handle, getting the bills paid. So we actually brought his sister in to work part-time. And, we were just this tiny little startup that didn't really check all the boxes as we were in on a learning curve. So we learned as we went, but it was challenging. And I think the exciting part was that we were unfortunately dealing with, what was the GFC, but we were right. So that was like, we were, excited and had momentum. And I think that there was tremendous support by the institutional investors that had been Credit Suisse clients. So you'd wake up at 3 or 4 in the morning and I'm ready to go to work. I'm so excited. I'm reading the paper every day, like what crisis is happening today. So there was a lot of adrenaline flowing and excitement that really allowed for us to, I think, have strong momentum.
I think it's definitely worth mentioning the context that you made this transition during the great financial crisis. If you were to tell somebody, hey, Ivy established her business that focuses on housing and adjacent industries pretty much right before the GFC or in the midst of the GFC, things went really well, I think they would take the other side of that bet. But that's exactly what happened for a number of reasons that we'll touch on, I'm sure.
I think that when you look back on it, October of 2007 is when we launched Zelman. I think the rationale was that clients need us more than ever. to really navigate what's happening in housing. And institutional investors, irrespective of what's happening in the market, rely more heavily when there is so much uncertainty on equity analysts. It's actually, we do the worst when everything is sort of benign. It's like the markets, sort of everyone understands that there's not a lot of uncertainty. So whether it's really strong or really weak, we're needed even that much more during those periods.
Before we jump into some of the logistics and conversation about how you created value, transferable value, it might be another good level setting point to take the audience through sort of the economics of what your business actually does, the sales process, who you're selling to, whether it's recurring revenue or one-time revenue.
Yeah, it's a really screwy business. I think that people are surprised when I tell them this, but we have institutional investors that simply agree on an amount to remunerate us. So, for example, we might have clients that pay us for full access to our research product, as well as the ability to talk to analysts to understand they want to talk about trends or specific management teams, whatever the stock they're interested in. Let's just say that's $25,000 a quarter. And then there's different tiers. So if they want, hey, I want to be the first call, they're going to pay north of that, the other aspects of service. And then people that just want to read and don't need to talk to someone might be paying less. And yet that's one part of our client remuneration. We then have large accounts like Fidelity, Capital Research, BlackRock, big firms that actually have a voting system. So they ask their portfolio managers and their research associates on a quarterly or even annual basis. We have a pool of capital of all the people that serviced you for this year or this quarter. Who would you allocate votes to? And votes translate into dollars. And a lot of times we don't even know what that formula is. We might be just given one number and have really only maybe some comments, or these people were important to our process and therefore got votes. So I remember chatting with an analyst that was starting out and wanted to start her own firm. She came to visit me and was asking me about, some of the logistics as well as the strategy for pricing. And when I told her about the voting thing, which, when I was at Credit Suisse or Solomon, I'd hear, we got votes, but I never really thought about it because the bottom line wasn't my concern.
Right.
Now I'm very concerned about it. And she's like, oh no, if Fidelity doesn't pay me, I'm not going to work with them. And I'm like, good luck with that. And yet, her startup didn't work because she fought a system that has that kind of what I say screwy remuneration. So that's another client of ours, is this voting client. And then we also have clients that really don't tell us anything about who within our organization really help them. And we just get one number once a year and they pay us based on what we verbally agreed. So that's kind of the balance of how we get paid.
Well, I'm glad I asked. You used the word screwy first, so I guess I'm comfortable repeating it now. That does seem screwy. It's got to be impossible to forecast with certainty what compensation is going to look like, because it's so variable and dependent on different factors that are largely within your control, but there's definitely a piece of that that really isn't.
Yeah, and I think that a lot of the buy side institutional investors, they're going to allocate based on a pool that those votes will determine remuneration. But if they didn't do well that year, they'd say everybody's down. So even though you got votes, you might not even get paid anywhere near where you thought you would, because they'll say we had a tough year. So it's so variable and very difficult to forecast. And what we have is strong relationships with the broker liaison that we work with. We know what we did last year, and we'll say, wait a minute, we upped our coverage, we upped our service, and you guys are paying us down, and we'll refute that and try to defend ourselves and why we deserve more remuneration. So those conversations do come to fruition at times, but you're right, it's difficult to forecast.
Well, one of the reasons your research is so sought after by the biggest players and everybody in between in the industry is because you have this unique value proposition that you talk about really elegantly in the book that started pretty early on during your analyst career, where you're creating your own contact channels, as I would call them. You're going sort of outside of the box of how things have always been done, and you're talking to private industry counterparts, suppliers, people outside of the normal chain of command, as I would call it. How were you able to, when you established Zelman, kind of build that unique sales process, information gathering process into the new DNA of Zelman?
Well, as you said, it started early in my career. So really starting out before I even was a published analyst at Salomon Brothers, my sales buddy that they assigned to me was the one who happens to be my ex-husband. told me you really need to find proprietary channel checks. And fortunately, housing is highly fragmented. So you can find a lot of private companies within, let's say, home building or building products or real estate brokers and mortgage. And within each of those silos, to go find a private builder, to build a relationship with, let's say, a private builder that operates in a few states or in one state or nationally, by going to trade shows, by word of mouth, by introductions from various think tanks. I developed relationships with private builders. And initially, I'm writing on a piece of paper, scribbling down what they're saying. And the reason they were willing to speak with me, I think, was combination of they heard the passion in my voice. They saw my excitement. They knew that I was open to learning and that I was going about it to really understand the industry better and not be dependent upon what just public companies are offering in terms of their commentary. But they also were going to get Credit Suisse's research in exchange. So I was giving them something in exchange for their intelligence. And by the time I left, and when I went from Zelman to Credit Suisse and then eventually started Zelman, they were loyal partners. It's never enough. They were always adding new contacts because you do have natural attrition, whether a company gets acquired by a public company or another private. So we're always looking for new contacts. And that really initiative has continued as we've now been a standalone firm since 2007. But those relationships that I've built with industry contacts, it's not easy. It's hard to get people even on the phone to listen, but it's the respect of, I think, them knowing that you're not taking this information and disseminating it broadly or naming them. It's all confidential, and they are getting a work product in exchange that they actually value. So I think that it really works. And right now we're trying to build a new survey for home furnishing retail. And I just went out to Colorado Springs maybe 6 months ago and spoke at a conference. And even to get the position to speak at the conference, since I don't follow home furnishing retailers, I had to convince the Home Furnishing Association that my housing research is going to be valuable to your retailers because they're highly correlated to housing. So they need to understand what I'm writing about and what we're saying. And he's like, they really they don't get that information. So by speaking at that conference where there were top CEOs in the industry, I am now working with my associate and we're developing relationships with many of those CEOs. And the person that hosted the conference has been now a big champion and has loved the research and is now saying you should talk to Ivy. So you have to find a champion. You have to find someone that's willing to help you. In real estate services, for example, Howard Hanna, local realtor here in Cleveland, based out of Pittsburgh, but significant presence here. Hobie Hanna, who's the president, we were introduced by someone and I was telling him what we're trying to do. And he very much supported the idea to realize that the real estate industry needs more research, that's quality research. So he introduced me to a whole slew of broker owners, not a realtor, broker owners, which was really our strategy. So, for me, it's finding my rabbi, my mentor in a specific sector to then have them help me, asking for help. Right now we have survey questions, no longer a piece of paper we're scribbling on, but an automated platform that we built ourselves internally. And sometimes the questions will be pretty much the same every month, could be 15, 20 questions. Right now, for example, everybody wants to know what the impact from the shutdown has been, or recently Bill Pulte, the head of FHFA, has been tweeting that builders need to do more to help affordable housing. We say, what do you think of Bill Pulte's tweet? So it might be a question that they haven't seen before, but it doesn't change, all that much. But the reason we're able to do that is that collectively, these industry executives know that we're aggregating in total, not providing any of this information that's confidential. And they know that we're going to have better collective input by everyone participating to then publish research that could be helpful to them. And it really is a great system. I hope no one copies me.
Well, I just find it so interesting that early in our conversation, I asked about some of the skills that you honed early on that you took with you. I think that might be the third example where it's very easy for me now to tie back the two kind of components. A, you're not afraid to just ask the question, to reach out to somebody and ask, but B, you're not coming to them with an open hand. You're coming to them with sort of a mutually beneficial, I would love some help and here's how it's going to benefit you. And I think we'll attribute that to your secret sauce, but I think anybody listening to this could take that same sort of broad formula and apply it to their own business. And that's something that, I don't know, internally, sometimes I'm sure I deal with the same struggle. I don't want to bother this person. I don't want to reach out to this person and bug them. But realistically, you're never going to know if you don't ask. But B, don't come to them and asking for a favor, ask them for help and explain to them how you helping them is going to also be beneficial to them. That's great.
And also, just to elaborate, we have, I think there's 14 of us now in research, myself included. And many of the analysts that have been with me for more than a decade, one analyst, Alan Ratner, who started with us in inception, now with me over 20 years, to train them to do what I'm doing, to have more, feet on the street. I would listen to their conversations with maybe an already established industry executive. And I would be like appalled because they'd go, hey, Jim, how are you? So what are you seeing? What are sales like? I'm like, whoa, I mean, like, slow down. These are people. You need to, how are you? Is this a good time to chat? Nowadays, God forbid, you can't call people. You have to email them first. Nobody calls anybody cold anymore. But I think it takes a lot of thought and personality, I guess, to develop a relationship. So find something in common. Where did they go to school? Where did they grow up? Do you have any kids? What team do you back? And then later, so tell me about sales. Or my favorite question to get people started, I'm doing it right now in home furnishings retail, is tell me how you got to where you are today. Tell me about your career trajectory. And most of the time I do very little talking. I listen. And then these people are like, oh my God, this woman's brilliant. And I didn't even say anything, but I was interested in their life and their story. I mean, their wives and family don't care. I'm like, God, tell me about your business. How'd you grow this business? So impressive. And so I think that takes a little bit of art and time. And you have to assume this is a long marathon. You're not a short distance runner. And those relationships, you're just cultivating them. And it's a lot of investment, but it pays off.
So training the next generation of talent is one of the major roles that you have to operate in as a business owner. Tell me how, as the business developed from point A to where you are now, how you've gone about finding that talent that works so well within Zelman.
Well, I think first and foremost, when we go back to inception, a year after we started, we decided to branch into investment banking. And Dennis McGill's brother, Tony McGill, had been working prior to Zelman in capital markets at Bear Stearns. They obviously didn't make it. And he had other experience in London. He had been also working in the business. So when he started, that was somewhat of a pretty big leap because we didn't really know investment banking. I worked with others in investment banking, but we had all these industry executives that really trusted me and Dennis and our research. So when Tony picked up the phone to try to provide investment banking services to them, whether it be capital markets, if they need equity, if they need debt, they were willing to take his call. And so his team, which he has a handful, let's say half a dozen people, are still fortunately with us and doing very well and doing a lot of M&A and doing various capital market transaction, whether it's IPOs that we're involved in. So that business has grown alongside research, but it's because of that Rolodex that we developed in the private market that really enabled him to be as successful as he's been. But when I interview people, Jordan, I'm looking for, people that understand financials. We wouldn't hire someone out of undergrad that, let's say, was an English major or a history major. We want people that have finance backgrounds, that understand the financial statements. And it's pretty quick. It's very easy to eliminate people if they claim they do understand financial statements and quickly check them, whether they don't. But I'm looking for humility. I'm looking for people that are respectful. I'm looking for someone who's hungry, who has very strong work ethic. And the people that we hire really meet all that criteria. And I'm now involved sort of at the end of an interview process in trying to sell the person that everybody else on the team loves. But initially, I'd say it's a lot of things I just said. And we've had a formula of being very successful with very low turnover, which I'm extremely proud of.
And where are geographically most of the people that work with the firm now?
Really, New York. The research analysts are in New York. We have a research analyst, it's a funny story, Ryan McKeveny, who's been with me since he was a summer intern out of Villanova. And now he's almost 20 years with me. But probably like 10 years ago, I was in New York and he was asked if we can talk. And I thought, oh no, he's going to quit, and I really like this young man. And he, I guess he's sweating, he's really nervous. And I'm like, what? And he's like, can I move to Chicago? As you know, I've been dating Mary. And, one, I know everybody's spouse or partner. I know their kids' names. I know their birthdays. We keep it all a track. We really care about the people, not just the work. And I looked at him, I go, of course you can, because he's an incredibly hardworking young man, well before the, COVID and remote work, because I knew he was loyal and a very strong performer. But he was so nervous. And now he's just had his second child a few months ago and works out of our Chicago office. And I think that giving people the opportunity that have already demonstrated that they are hardworking. We had another young man who recently got married and a few years ago moved to Maine. But most of them are in New York with these pockets that, life changes have dictated that they left New York and me in Cleveland.
Yeah, I mean, you leaving, I have to ask, this is, kind of off track a little bit, but moving from New York to Cleveland, do you think there is some sort of geographic arbitrage by taking a New Yorker and putting them in the Midwest where it kind of just puts them a little bit, because life moves faster in New York. You have this, this intensity about getting things done and moving fast. Do you think that's a real thing where if you put somebody from New York into somewhere in the Midwest, they're just more likely to hit the go button and be able to build a company and do things that maybe is more difficult for the average Midwesterner to do?
It's hard to generalize, but I think there is a work ethic, at least on Wall Street, within what I know, is that people are putting in long hours, are working their butts off. Otherwise, they don't succeed and they have to perform. And so when you think about, the arbitrage of now moving to Cleveland or anywhere in the Midwest where life might be a little slower, they're likely to still be at that same pace.
Right.
It's not going to change very much. Maybe, starting a family will change things, but generally speaking, one, you're coming in, better lifestyle, more affordability. It's a great arbitrage and I'd highly recommend it, especially people that have already invested 10, 15 years in their career in New York.
And it's a charisma thing. I mean, I went to a Midwest school where there was a big Northeast contingent, and the kids from tri-state area, you gravitate towards them because A, they're so much different than what you're used to finding in Northeast Ohio or Minnesota or rural Wisconsin, where a lot of my other counterparts were from.
Where'd you go to school?
Wisconsin, Madison.
Great school.
Oh, it was the best
One of
time.
the best analysts went to Wisconsin. Great school.
Great real estate program in general. If we go back to, I guess now your post-transition, you've been building Zelman and Associates, the role changes, right? Like you go from being an analyst to being a business owner. You're still doing a lot of the work, but inevitably some of that work shifts to the obligation of running the business. What were some of those adjustments that you had to make?
Well, I wanted to make them, and I think that it's been a incredible benefit to my quality of life because I was running really hard for my first, call it 2 decades or more, probably first 25 years. And now I hate to admit it, but it's over 35 years that I've been doing this. And I would just say that those first, call it 25 years, traveling 40 to 50 trips a year, working very long hours, weekends, also trying to raise 3 children, it was very challenging. So when we sold the company, I really felt that, I'm not going to live forever, that I need to pass the baton and develop more internally the people that will be around to take the helm. So I pulled back on travel. Fortunately, during COVID, with Zoom becoming obviously very much the norm, it allowed for me not to have to travel as much. It kind of opened that door. And so doing a lot more virtual meetings, and that sort of began the process of, okay, my analysts know a lot more than people think they do. Let them be the one to go see the client in the office. Let them go what we call marketing, where you go to a city like Boston or LA or New York, and you go from one meeting for an hour to the next meeting for an hour all day long, really humping it. And that could be with a very large group of investors or one investor on a one-on-one. I really took that part of my role and gave it to the analysts to do with a lot of oversight. Marry that with having more of a desire to keep learning. I wanted to stay close to the industry executives. So spending more time working on that side of the equation, developing the young people to know how to talk to industry people. So it's really been an internal focus, sort of like a big brother watching you, but also participating on the sides of the business that I really enjoy the most. So it's been a good process. Dennis McGill, my co-founder, didn't really like being part of a bigger bureaucratic organization, and we're a small division within Walker Dunlop. But when he left, I was really worried because he was really the backbone of the research department, and I was like, oh no, I'm going to have this much more work to do now. But actually, it's been a pretty seamless transition, and it just gave more autonomy to the senior analysts and really had them step up. In order to get them to step up and do more work, it's not always just about remuneration and how much I'm getting paid. It's how much respect and credibility do I have and who's got my back. And I find that working for another firm now, that has been a key element of what I do. Fight for my people and make sure that nobody is being taken advantage of and making sure that they're rewarded appropriately. And that's, the gatekeeper, so to speak. That's a role that I've taken on. Today, it's a lot more internal things that I have to do, working with, budgets and dealing with HR. We didn't even have an HR department. Mentioned HR. We didn't have an HR department, which we probably should have, but we didn't have the bureaucratic aspects that we now have to deal with. And some of my employees that may not like that, I have to work with them to, I know it's not fun, but you need to do this training program that WD put out. So, it's about, trying to convince them that these might be different aspects of what we do today, but there's still stuff that you need to do. And I really appreciate you doing it. And so staying close to everyone, checking in regularly, open door policy, those are all aspects of what I do and spend my time now more than any other aspects of what I used to do.
So we'll talk about the actual, the marriage itself with Walker and Dunlop and what made that successful. But there's plenty of business owners who listen to this podcast, and I've seen it time and time again. The razor focus is on top line, bottom line. How much am I bringing in? How much am I keeping? And those are great North Stars to have. But what I find neglected all the time is what makes your business valuable to a potential third party, what makes it transferable. Was there a specific period of time or moment during the Zelman journey where you started to think about what makes that transferable value? What can make a third party interested in actually acquiring the company?
I probably didn't think about it from trying to sell the company, but there was a point in our trajectory that we were hitting a wall on growth on the top line. And I think a combination of what I said earlier, that housing was sort of just relatively benign. There wasn't a lot of uncertainty either way. And I found growth was more challenging, especially institutional investors that were losing market share to the computers, to passive money and money management. And so we were seeing some pressure on the top line. So I started thinking about our research could be utilized beyond our core client, which is an institutional investor, relatively small amount of private equity, but we didn't really go outside of those end markets. So I thought we should go to corporate America and we should be selling our research to the whole housing ecosystem. And so I started reaching out to some people that I thought could be helpful that might want to partner with us. And I was really doing that single-handedly, and I didn't really get any bites. And then in March of 2020, Willie Walker reached out to ask me to join his webcast that he now has successfully built into an amazing machine that he interviews really great speakers weekly. Asked if I would go on as one of his early guests because he just started it. So in August of 20, I got slotted. And when the webcast was over, we had a lot of really interesting leads. And my sales force was really excited. So when I went back to Willie to thank him and said, there might be an opportunity because you're servicing the industry, the multifamily industry, as well as other parts of the corporate world of housing, that we might find a way to work together. And he was interested, and one conversation led to the other. And he was also looking to expand investment banking. And I think that was really what they were most interested in. But I think it's been a good combination right now. So we did the dance and decided to join forces.
Yeah, I mean, you definitely never want to go through a transition because you're tired. You want to go through a transition because you're energized, and there's a partner that can help you do something that you weren't previously doing, and vice versa. Again, going back to your idea of, hey, let's do this thing that's mutually beneficial. If we talk about the deal itself, logistically, this is what everybody gets caught up in. Everybody wants to know about multiples and dollar amounts and everything. But when you're going through a transition, there's a million different variables and levers to pull. What were some of the non-negotiables that you had on your side, and were there any on their side that you guys really had to come to an agreement about? I'm not necessarily talking about dollars. I'm talking about things,
Well,
goals
one
that you had.
non-negotiable was that I wasn't going to change my office location. I wasn't going to start going to the office every day. I'd been a pioneer in remote work since my kids were as early as elementary school, that I wanted to be home with them when they got off the bus. So I wasn't going back into the office, and I wasn't leaving Cleveland. That was a non-negotiable and not an issue with them. I think in general, we were a little bit concerned that they might try to tell us what to write and what to say, and maybe give us feedback that we weren't going to be happy with. For example, their clients are multifamily owners and operators and developers. So if we're writing negative things about multifamily, are they going to be okay with that?
Sure.
So Willie had to go to his executive committee, and they brought it up. What happens if we don't like what she's saying? And Willie, to his credit, said, we want to hear both sides. We want to hear what, the positives and the negatives, and we can't put our head in the sand. We can't just be eternally bullish. So non-negotiable was that we would never deviate from our credible, work that we do, no matter what we were saying. And that was understood up front. That was an incredibly important aspect of what we were never going to compromise our research just to make the parent company happy.
What parts of your business do you think they found most attractive that they were willing to pay up for?
I think they were excited about the fact we were a broker dealer, which you need to be a broker dealer in order to transact in the equity markets and the capital markets. And they wanted to grow their investment banking business. And we had a very established investment bank. And I felt that, whether it be CBRE or JLL, two of their larger competitors, they were offering research that was that all Kool-Aid and sunshine, everything's great. And they felt that we were the most credible research firm on Wall Street that could really help differentiate their investment sales and bankers and how they interacted with clients by offering credible research rather than just the fluff that everybody else was producing.
So you mentioned in your book that now you're hoping to and already starting to spend more time working as a board member for different companies, being in an advisory role, given all the experience that you do have. When you're talking about a buyer or potential acquirer mindset, how can you advise business owners to reverse engineer that? And said in another way, how can business owners make their business attractive to at least bring people to the table and say, this is something that I would potentially want to talk about?
It's tough to say. I mean, obviously, I think where I sit, I thought about what end markets am I not penetrating? And is there an opportunity to take the business model I had and duplicate that for other end markets, and finding a company that might value what we do already and find that that would be a good fit. So I think, what makes any company valuable, if their sales are making, I don't know, decks, and looking at, recently a transaction where James Hardy bought AZAC. Now it's a public company buying a public company, but they didn't have what AZAC had, which was relationships with the home centers and some of the bigger clients that James Hardy wanted to penetrate. James Hardy was very skewed to new construction. So I think there's usually something missing in a business that they are searching to find, a round peg that will fit in a round hole. And, having the knowledge of what other companies need, whether it be end markets, whether it be the price point that you're selling at, whether it be your clientele, I think having a better understanding of the competitive environment is what I would be analyzing. What are our competitors doing? What are our clients' needs? Where do we see those needs growing the most? Where are we successfully having the best penetration with our services, and where can we expand those to?
And obviously, the financial component of any deal is super important, but I have to assume that you already mentioned one of your non-negotiables, but personal goals that you wanted to be able to achieve post-transition, post-partnership with Walker and Dunlop. Is there anything that you see owners of companies potentially overlooking when it comes to, hey, it's time to partner, be acquired, that sort of thing, outside of the dollars and cents of the deal?
I do see a lot of M&A from my perch, and I see different ways companies handle whether they're being sold or they're the buyers. But a lot of times those that are selling may not be thinking about their employees and retention as much as they should. And I think There's a company right now that we're representing that's trying to sell their business, and they have an ESOP, and that means their employees own the company. And they are very laser focused with our investment banker on making sure a lot of the current policies stay in place, that these employees are protected, basically. And I don't know that every sale, they're focused, how much money are you going to get paid? What's my multiple? What's the bottom line? Thinks about after, what happens after. And I think for us, taking care of our family of people was really a critical component, that everybody would be, nobody would be restructured out. We're not getting rid of, this group because you may not think we need it. Giving us the autonomy to make a lot of those business decisions was also a non-negotiable. We didn't want anyone really dictating or leading the business. We wanted to lead it ourselves. And that was pretty much understood from day one.
So I've got some fun carve out questions. One of the ones I always like to ask is now that you have this whole body of work that you've put on paper, what do you think your kids are most proud of?
Well, it's interesting you say that because, they're now 21, 23, and 25. I think my whole life, there was a lot of whining and complaining, and understandably, that I was gone one night, sometimes 2 nights a week. And I think when they're really little, and it's probably still to some extent, they're just narcissists. It's all about them and what's going on in their lives. And we tried really hard. Kim Gray, to her credit, my assistant, would know their calendars backwards and forwards and knew when their spring concerts were, when the play was happening, whatever it was. And I would try to be there, but I did miss some things, and planes get delayed. And so there was always this like, Mom, but I'm working, or Mom, you're always on your phone. I'm not playing a game though, I'm emailing. And so trying to convince them that what I was doing was important. And I don't know that they ever really had a light bulb go off, but my son was at our housing summit. My oldest daughter, Zoe, and my son, Zach, came to my housing summit in Boston in September. And they have seen me on CNBC. They've seen me on Bloomberg. They've seen me quoted. They saw my book. But it was a moment, my son said, that I was on stage and there's probably 600 people in the audience. And I presented for an hour. That's our opening presentation on our State of the Nation. And later during cocktail, someone said to Zach, he's the 23-year-old, how do you feel about your mom being up on stage? What does that feel like? And he says, my whole life, I know my mom was, successful, but seeing her present, I had no idea she was such a rock star. And it really was eye-opening to me in a way that I've never seen before. So that made me really happy. And I think that they do respect me more now that they're mature and have an understanding of, how hard it is to get a job. And, my youngest is a junior in college and in University of Miami, and is like, wow, Mom, it's so hard. And I think those are parts of now looking back that they say, wow, Mom, it's amazing what you were able to accomplish. So it takes time, but they get there.
I have to say, I'm a sap, so this isn't going to surprise anybody who knows me. But when I was reading about the tradition of going upstairs I've got two little babies at home, I couldn't help but tear up a little bit because it is just, it's you're saying all these things about how you were working and what your kids are most proud of, but you do detail in the book how you made family a priority. How that was something that was, and even in the non-negotiables with Walker and Dunlop, like these are things that you put a lot of time into thinking about, the things that you truly wanted. And I think that's missed by a lot of people.
Well, thank you for saying that, Jordan. My always attempt was to balance as much as I could, but I think that it's difficult for moms, realizing when dads travel, not to say the children don't care, but when mom's gone, it's a very different scenario. A lot of nurturing comes from the moms more so, I think, on average. But I think one of the things that I did that I'm very proud of is that I would write in a journal. I journal to the kids, whether it was, hi, Zoe, hi, Zach. And anytime I was superstitious. So before I got on a plane, and I did that their whole lives. And just recently gave Zia her books. So at 21, I give them their books that I wrote in for 21 years. And my daughter celebrated her 21st. We were in Miami celebrating a week ago. And I didn't say anything because I gave her the books and she was having a lot of girlfriends were there. And I get a text yesterday while I'm driving. And it's like, I'm bawling, Mom, reading the books.
Wow.
So I called her and she was crying and I said, honey, what? She's like, Mom, I just feel so loved. And she was like reading me passages and it just felt so great to have her appreciate it and enjoy them. And it was a life project I don't have anymore.
Well, there's other projects, and are there any over the course of your career, fast forward to now, are there any non-business activities, some might dare call them hobbies, that you think have kind of changed how you think about business?
I don't know. It's changed how I think about business, but my life, I've always been focused on wellness and fitness and, doing Pilates or strength training or going speed walking. But I have fallen into obsessively at times doing puzzles, 1,000-piece puzzles. Magic puzzles are really tough if anyone's interested, but I really get lost. It's kind of the same that some people feel from knitting or, those that meditate, but really love that. And traveling, I'm getting to travel a lot more. I spent 2 weeks in Europe with my fiance, which was great, and having again just more balance, which is really nice. I guess that's what it's supposed to be. It's a curve, a bell curve. You go up, you work your butt off, you get up here, and then you start to come down. And I'm sort of on the downward part, which is a good thing.
One of my favorite carve out questions is what is a core belief that you held close early in your career that you've completely changed your mind on?
I realized you don't have to stay in a situation if it's not healthy, even if it's at the detriment to other people. I've always put others first. And I'm learning that I don't need to do that I could put myself first. So my whole life, it was everyone else. Now it's about me.
It's something that you've worked really hard towards. The last question I end the same with everybody. What didn't I ask about?
Well, I think it's really important to me, having come from an untraditional background. I put myself through undergrad at night school and took on student loans. Didn't come from the Ivy League, which most of my peers that I started with, they did, in fact, come from these prestigious schools. I was at a state university, George Mason. And what I find is that a lot of people are intimidated if they're not from that segment of the world where they didn't go to the Ivy League, et cetera. They're not going to pursue a career in finance or intimidated by the whole idea of it. So I wrote the book because I wanted to pay it forward. And I wanted to tell people my story, and found the feedback was that so many people had stories that were either similar or aspects of it that they really connected with. And I am now teaching, which has been a lot of fun, and helping young people and getting them prepared for a career in finance has been really rewarding. And that's something that I'll continue to do. I don't know if teaching will expand beyond a 1 credit class, but I really like to work with young people and pay it forward.
I'm excited to link the book in the show notes because it was really well written. It was a page turner. It wasn't one of those. The pictures were awesome too. It wasn't one of those books where you feel like, I just read 3 pages and I don't know what I read. I have to go back. It was definitely an engaging one. Ivy Zelman, thank you so much for taking the time. You've been incredibly generous. I think you shared a lot of really important wisdom that people can benefit from, both on the business side, but also the personal side. Really appreciate your time today.
Thank you, Jordan. Appreciate you guys at We're Next Sphere. So have a great day and happy holidays, everyone. Thank you.
Price Discovery Money and Mindset is brought to you by Wernick Wealth Managers and Chagrin Valley Business Strategies. Opinions expressed by Jordan and guests are their own and do not represent investment advice, solicitation, or the like. For more information and resources referenced in this episode, be sure to check out the show notes. Thank you and see you next time.